everyone, and welcome to the premium video newsletter for Thursday, September 19th, 2013. We finally saw what real volatility in the global markets looks like yesterday. And what a day it was! I always like to analyze the day after a big move because it provides many clues and tells us how much emotion versus real commitment was taking place when the buying occurred after the FOMC announcement yesterday. Let's start off with the fundamentals and work our way into the technical trading action and the setups from there. Several reports came out today and they all say the same thing. The US economy is picking up. It's not perfect yet and it's going to be a while till we're booming, but the evidence is clear that things are getting better. U.S. home sales rose last month to the highest level since February 2007, as buyers rushed to close deals before interest rates rise further. If you recall, I mentioned a few months ago that as interest rates begin to rise, there will be an increase of home buying because people will want to get ahead of the increase in rates, and we're beginning to see that right now. So watch those home building stocks and ETFs. The National Association of Realtors said sales of previously occupied homes rose 1.7% to an adjusted annual rate of 5.48 million in August. That level is consistent with a healthy market. The Conference Board says that the index of leading indicators increased 0.7% in August, compared to July when the index had risen only 0.5%. The expectations were for an increase of 0.6%. Jobless claims in the week ending September 14th increased 15,000 to 309,000, which compares to an estimate of 330,000. This tells us that we're on track as far as the economy is concerned. And remember, professional traders never look at the actual numbers. We always look at the estimates and how the actual numbers compare with those estimates. So be mindful of that when you look at reports and the numbers that are coming out. Let's start with the bond market, since on so many different levels, the bond market had the most direct exposure to yesterday's news. I alerted you to the fact that the bond market was overbought and may be reacting to yesterday's news. This, taken into account that the bond market is very choppy, is playing out today in the bond market very closely to how I estimated today would turn out. We retraced about 1/3 of the gains we made yesterday, and we closed close to the lower range of the day. This tells me that we have more to go. I don't think we will drop straight away, but probably over the next 3 to 5 sessions. I estimate that we will erase much of the gains we made after yesterday's announcement. We're still near overbought levels, and equally as important, the RSI is diverging from the price. This tells me that the upside is extremely limited and we're on the right track, thinking yesterday was most likely an overreaction in price based on the announcement. Traders who went long yesterday will start to panic in a few days or possibly sooner, and we should see more selling happening sometimes by the middle of next week. I expect the next swing down to be to the 124 area. The Fed decision was only a continued bandage on a serious problem, so a delay of 1 month or maybe even a bit more is not going to change the fact that the Feds are close to offering less assistance to the US market. One way or another, it will reflect in the price of the bond market, and most likely it means bonds moving down once again and interest rates moving higher. The US stock market is mixed today, with tech still leading the broad market. I do want to point out a few sectors that are letting us know that this rally may be over. I'm generally impressed at how the stock market is holding up, but the semiconductors, the sector that led the market to new highs, is beginning to show signs of slowing down. We have an island reversal pattern today, and moreover, we have an RSI indicator that's extremely close to the 80 level, which is a sign that we have little left on the upside, at least for now. This subsector is overextended and needs to correct or slow down. I think we will see the 39.5 level in the next few sessions, and then we will evaluate the internals to see which way the market is headed. Also remember the Russell, which is made up of small cap stocks, is an important index to examine near market turning points. The Russell is more speculative than the large cap indexes and tends to show trading emotions more clearly as a result of its speculative nature. There are less fund managers that are invested in this sector, so we have fewer institutions and more traders, and this is the best way to see market sentiment. Right now, traders who bought the Russell are still holding on and hoping that the rally will continue. But remember, what did yesterday accomplish except delay the inevitable? We have a few technical clues that this swing high may be coming to an end. First, we have divergence between the RSI and the Russell. Second, today's trading action did not take out yesterday's high, which is another important clue. And third, the RSI is still near very high levels. From the looks of this market, I think the odds are fairly high that we're going to move down to the 105 or maybe the 104 level before deciding what's next to come. The Japanese yen is sharply lower after a Bank of Japan policymakers said pressure is increasing to widen their monetary stimuli program. We've talked about the yen, and if you recall, I mentioned a few times that the yen is still in a long-term downtrend, and we have to watch the downside more carefully than the upside. Technically, the yen created a support area a few months back, and now we broke it. We reverted to a lower trend line, and now we have to see if we can maintain that area. Since the Japanese bank is more likely than not going to increase stimuli, and stimuli weaken the country's currency, as you can see by what happened to the US dollar in recent months. I'm becoming more bearish on this market over the next few months. If we break this trend line, and we will know shortly if that will occur, we will go down to the 97 area. Let's watch the yen over the next few weeks and see if we do in fact break lower. Because I'm seeing more downside, especially if the Bank of Japan reacts to the pressure to increase the stimuli in the coming weeks. The British pound is lower after a report showed British retail sales in August were very weak, and I mean very weak, falling 0.9%, and that compares to estimate of an increase of 0.4%. The pound has been moving straight up for several trading sessions, and the FOMC only fueled that fire further. However, the pound is now at a very high RSI levels, and we have a hook pattern on the RSI which is significant. Another indication that the pound is overdone is the fact that we traded higher on the euro today but didn't have enough strength in the pound to join that rally. I'm looking for a slow sell-off, most likely to the 159 level, and then we will see if buying is starting to come in. There's no strong support till we hit the 157 to the 155 area, and that can take some time, especially if the dollar rallies. Remember, the FOMC news we heard yesterday was not a license for the Feds to continue to print money and throw it into the economy. It just delays things. It won't last long, so keep that in mind when you're looking at the currency market and how they reacted yesterday. Looking at the setups for tomorrow, there's a tail gap to the short side on ticker symbol PSX. Place a sell stop 15 cents below today's low, and if filled, place a buy stop 15 cents above today's high. The second setup is also a tail gap to the downside. Place a sell stop 25 cents below today's low, and if filled, place a buy stop 20 cents above today's high. This is a higher price stock, so I want to make sure we give it the extra price consideration that it needs to move around a bit. Don't forget to cancel both orders if no fill by lunchtime New York time tomorrow morning. That's it for today's tutorial. Have a great night, everyone, and I will update you tomorrow. Remember, it's Friday tomorrow, so we're going to see a wild day or a very, very quiet day. But Fridays rarely give us anything in between. Have a great night, everyone.